Or hip hop is
Hip hop, thank you.
I heard you saying your flow amounts that you had tested. Thursday, did you?
We are live.
Across the street?
Welcome to Legislative Committee on Administrative Rules for December 2nd. First, excuse me. For December 2nd, first item on the agenda is to convene and approve the minutes of November 18th, 2021. And before we do that, we will ask the committee to introduce itself.
Oh, I'm Carol Odie, and I represent the far New North End of Burlington, and I'm on the House Ways and Means Committee. I think we have lost.
Those that are on screen, if you can hear us, raise your hands, please. Thank you. Hands have gone up. Okay.
I'm still on YouTube.
Yeah.
Good morning. My name is Joe Benning. I am a state senator from the Caledonia District, all of Caledonia County, the 6 northeasternmost towns of Orange County. I chair Senate institutions, and I'm on Senate Judiciary.
I'm Anthea Dexter Cooper from the Office of Legislative Counsel, and I help the committee.
I'm Senator Mark McDonald from Orange County, except for those represented by Senator Benning. I serve on Finance and Natural Resources Committee.
Good morning, Representative Trevor Squirrel, Underhill and Jericho, and I serve on House Appropriations.
Morning, my name is Chris Bray, one of the 2 Addison District Senators, which is Addison County, Huntington, and Buell's Gore. I serve on Natural Resources and Energy and Finance.
And we have 2 members on Zoom, Representative Higley and Representative Bongartz were identified on the screen, and Senator Lyons will be coming on in a half an hour. Would you like to say hello, representatives? Okay, we're all set. Representative Odie, did you have a motion?
I move to accept the minutes of the meeting, November 18th.
Representative Odie is moved to approve the minutes of the last meeting. Any discussion? If not, all those in favor say aye.
Aye.
All opposed say nay. And the minutes have been approved. First item on the agenda, yet again. We are taking up 21P13 Department of Financial Regulation, Healthcare Stop Loss Insurance. And first on the agenda, we have 2 people to speak to us. Sebastian Arnego, Assistant General Counsel, Department of Financial Regulation, and please forgive me for the mispronunciation of the name. The floor is yours, sir.
Thank you. Good morning. My name is Sebastian Arduengo, and I'm appearing for the Department of Financial Regulation. And I'm here to testify in regards to the department's proposed revisions to the healthcare stop loss insurance rule. I last appeared before this committee to ask for an extension of time while we worked with our stakeholders to resolve the outstanding objections that they had to the final proposed rule. And on Tuesday, we sent the committee language that substantially resolves all of the objections raised to the final proposed rule by both industry and to a lesser extent, the healthcare advocate. I believe that Mike Fischer will be testifying this morning with more to add. And what we're asking the committee this morning is to approve the language that we're proposing that changes the final proposed rule. And I think for a bit of context, my testimony this morning will talk about the final proposed rule, the objections that were raised, and how the new language resolves those objections. So if you'll recall on page 2 of our comment response and changes letter dated September 16th, the department explained how stop loss insurance works, in that there's a self-insured employer in that they pay for their own healthcare expenses, and a stop loss insurance policy serves to limit that employer's exposure. And it does this in 2 ways. There's an attachment point where the insurance attaches that's per claimant, and there's also an attachment point where the insurance attaches in the aggregate. So under the rule, it's 2009-02, the department is supposed to undertake a study every 3 years looking at those attachment points to determine whether they've kept pace with medical inflation. If you'll turn to the excuse me, if you'll turn to page 7 of our comment response and changes letter, you'll see that our actuaries found that even after adjusting for medical inflation, for employers with 10 or fewer employees, at the bronze metal level, i.e. how rich the plan is, those employers would be ceding upwards of 60% of the risk of their stop loss insurance policies to the stop loss insurer. Excuse me. So to make sure that very small employers that wanted stop loss had skin in the game, we created a new category for small employers with 25 or fewer employees that have higher attachment points than small employers with over 25 employees. I'm sorry, excuse me. And as a result of those higher attachment points, Blue Cross Blue Shield of Vermont objected, saying that if they were to impose those higher attachment points on their current clients, then many of those clients, particularly those with better claims experience, that is to say, the healthier employees, wouldn't be able to access stop loss coverage because those plans would never hit the higher attachment points. The healthcare advocate objected to the final proposed rule, saying that it didn't go far enough in protecting the small group market and discouraging employers from leaving the small group market to self-insure. So those two objects have always been in tension. The object of making sure that employers can choose coverage that works for them, and the object of protecting the small group market against the risk of adverse selection, which is to say healthier or employees with healthier populations leaving the market because self-insuring is so much cheaper. So in the final proposed rule, what we had tried to do was strike a balance, and that balance would have left several employers that are currently getting stop loss coverage from Blue Cross Blue Shield and Cigna to move back to the small group market. In November, Blue Cross Blue Shield of Vermont and the other industry stakeholders approached us and asked if we would consider either leaving in the higher attachment points that are otherwise applicable to small employers for their current clients, or creating an exception that would allow employers that offered that richer level of coverage to benefit from lower attachment points. Because we thought that this furthered our regulatory objective and would also prevent employers from losing the coverage they had in the middle of a pandemic, we agreed to the concept, and we also agreed to language that the healthcare advocate suggested in terms of required disclosures and policy provisions. So those are the changes that are in the modified language that the department sent to the committee on Tuesday. I just want to go over that. So if you'll turn to the language as modified, which is a part of the packet that the department sent on November 30th. We have a few different changes. First, we have some technical corrections that were suggested by legislative counsel, and that's every time you see the word regulation replaced with rule. Those are the changes suggested by legislative counsel. And there's also capitalization changes that were suggested by leg counsel. But the real change is in subsection 4D, where we have written in an exception to the attachment points that would otherwise be applicable to employers with 25 or fewer employees, where existing employers can keep getting stop loss at the lower attachment points that are applicable to small employers. So an employer with 25 or fewer employees can have stop loss coverage with an individual attachment point, which is at least $33,200, or in the aggregate, 120% of expected claims, or $33,200. And these attachment points will make these employers have more skin in the game, but will also allow them to get stop loss coverage and keep the self-insured plans that they have. We have also, at the request of the healthcare advocate, added language in section 5D that would require stop loss insurers to provide small employers a statement describing the financial risks of self-insuring, including the risks of claims volatility, which is sort of an inherent feature of very small groups, in that one member can get sick and then change the overall claims spending of that group dramatically. Finally, in section 6, again, at the request of the healthcare advocate, we added language to the form filing requirements that would prevent stop loss insurers from excluding coverage or benefits that are in the underlying self-insured plan, or making medical necessity determinations, utilization management requirements, or usual and customary charge determinations, which are all decisions that are supposed to be made by the plan administrator under ERISA. And then finally, at the request of all of the stakeholders, we included a firm effective date of this revision, so that it would apply to plans or stop loss insurance policies that are issued or renewed on or after March 1st. So I think with that, I will stop there and ask if the committee has any questions.
Thank you. Does the committee have any questions before we hear from the next witness, Senator Bray?
Thank you. I wanted to follow up. The committee had asked at an earlier LCAR meeting on this subject for a list of areas of coverage, scope of coverage, as they would under Vermont law versus how they operate under the federal programs we're talking about here. And I checked with counsel. I'm not aware that the committee has received a list from DFR yet. Do you know if that was generated and sent over?
It was not. I will get that to the committee.
Okay. And one other question. I know that you're not, I guess, based on past experience and seeing who moves from the general in-state insurance pool into a self-insured program, do you have any expectation that these rules as proposed will encourage more people to enter the self-insured marketplace?
Based on what we know about the employers that are choosing to self-insure, it's our hope that this rule will change the financial incentives for employers that are considering self-insuring, in that if they choose to self-insure for whatever reasons, they will have more exposure in providing their own health plan. And it's not the department's role to tell employers in the state what's best for their employees. but it is our role to ensure that employers that do self-insure actually are bearing some of that risk, as opposed to having a situation where the stop loss coverage functionally acts as a high deductible health plan.
Okay. Has the department analyzed the impact of the self-insured, the ability to self-insure to alter the pool of insureds in Vermont, and seen any kind of impact on rates for those who remain in the in-state pool as opposed to self-insuring?
Yes. So even though the markets were unmerged, so that the risk pool, especially in the small group market, is dramatically smaller than the complete merged market. We don't anticipate that employers leaving the small group market would have an appreciable impact, but our actuaries didn't study that question specifically. My recollection is that Blue Cross Blue Shield of Vermont had looked at that question, but it was not in their written comment.
Thank you. May I ask, sorry, a quick follow-up. Do you know when you could get us that list of scope of coverage under the self-insured market rules versus the Vermont rules?
I could do that by the end of this week.
Thank you.
Any further questions for the witness? I'm going to ask a question that probably know the answer to, but the public is listening in, and when you refer to this market having more exposure, what are you saying about this new market?
Apologies if I was unclear. When I was speaking to exposure, I was speaking to the employer having exposure to the risk of funding their own health plan.
Are you saying it's riskier?
Yes, because if you're an employer and you're funding your own health plan, under ERISA, which is the federal law that governs employee benefits, you have to pay for all of the covered expenses. So if you have an employee that has a complicated pregnancy or that has cancer, even if you haven't had a lot of health claims in the past, you could suddenly be on the hook for $1 million worth of claims. So that's the kind of risk that employers are exposed to when they self-insure, and they procure stop loss insurance to mitigate against that risk.
Thank you. Any further questions for this witness? Not. Our next witness is Michael Fischer, Chief Healthcare Advocate, Officer of Healthcare Advocate, Vermont Legal Aid.
Good morning.
Good morning.
Good to be in the room. I'm Mike Fischer. Yes, I'm the Chief Healthcare Advocate. And I'll just start with a high level. We have found a way to support the proposal in front of you. We wanted DFR to, as Sebastian just said, we wanted DFR to go further. And I'll describe a little bit why we believe it's important to go further. But given the really tremendous volatility in front of us right now, we certainly understand the decision to go this modest step. We have two major concerns. The first is we run a helpline, and people call us every day to describe problems with the healthcare system and problems that they're having. We're there for individuals. We're not there for small businesses. For a very good reason. We don't want to advise a small business about what type of plan is best for them and then have the possibility of needing to advise an employee of that small business who's aggrieved by that decision. We would be in conflict with ourselves. It's not our role. Who is there to help small businesses make tough decisions who is not also trying to sell them a product? So it's a troubling dynamic. I have often felt it's a troubling dynamic that small businesses are out there making these decisions, often with a person selling them a product in front of them. And they have the gun against their head about price increases that they can't afford. So they're forced into decisions that might be less good for their employees and might put them at substantial financial risk. So we very much appreciate the disclosure language that DFR added to this rule. We think it's a step in the right direction, but we continue to have that overall concern. And by the way, from time to time, I get calls from employers, and they say, what am I supposed to do here? And I have to go through my whole, like, I can't advise you, and try and help them understand the rules. But it's a tough dynamic for an employer that wants to do well by their employees and is trying to make it financially. The second major concern is adverse selection against the exchange. And we believe this is playing out today. Representative Bray, I'm not going to be able to give you numbers about how it's impacting the exchange, but we see it happening today where brokers are approaching small businesses, again, who are trying to figure out how to make it financially. And if that small business has a younger, more healthy employee group, they will get better rates. They will get lower costs, I should say, through a self-funded mechanism. If if the next year their group is more expensive, or the business down the road has an older, more expensive group, they won't get lower rates in a self-funded product and will only have the exchange. This is a perfect sorting of small groups into healthy and less healthy groups, and a very troubling dynamic for the exchange pool. So having said that, DFR took in this rule the modest step of increasing the attachment point, creating more risk, leaving more risk for the small employer who's newly moving to self-funding, and grandfathering in those that are already there. So I have to agree that that's a compromise, and at least is a step in the right direction. And then lastly, I didn't hear DFR say this, but it was my understanding that that there was one more point that was going to be made today, and I'll just go ahead and make it myself. This is complicated stuff, and hard for a committee like you, a rules committee, to wrap your heads around. It's hard for a policy committee that spends all day doing this stuff. But we think there's very important healthcare policy decisions to make around these topics and think it's very important to ask the policy committees to take some time to look at these issues. I think that's all I had to say. I'm happy to respond to questions if there are any.
Questions from the committee? Senator Bray.
Thank you. Good to see you, Mr. Fisher.
Good to see you.
So the question I have, and it sounds like the concern you have on a policy level about drawing the sort of adverse selection. So we'll end up, my sense, although I never served on a healthcare committee, is that what we're creating is a lower cost alternative that will draw the healthier participants in the current larger pool into these subsets and therefore increase the cost to those who remain in the general insurance pool in the state. And that seems to me like it cuts against my understanding of the state's policy for community-based rating. Is that accurate or am I missing something?
Yeah, with one adjustment, I don't think we're creating it. I think it has been created. It exists today. And this rule that's before you takes a step, a modest step, but a step in the direction of closing that door or making that, making it less likely that those businesses will move in that direction. New York has a straight prohibition on stop loss insurance for small businesses. Obviously, I'm the healthcare advocate. I would support such a move. I certainly also understand why DFR is not in a position to go for such a drastic change, and that is in part why I think it's really a legislative decision. To really protect the marketplace in a much more severe way.
Okay. So absent that kind of statutory prohibition, is there anything in this rule that you would strengthen if the compromise language were further adjusted? Just like to understand better what could be further improved, even if it's actually not on the table in front of us today.
Yeah, I will say, I want to honor my commitment to support the compromise that's in front of you. A previous version didn't have the grandfathering dynamic, grandfathering small businesses that are currently self-funded. I won't disagree with DFR's point that there's a great deal of volatility. There's a lot of unknowns in healthcare policy at this moment. And not wanting to rock the boat too much at this moment. But that previous version would have been easier for me to wholeheartedly support, to support.
Thank you.
More questions for the witness?
Sebastian has his hand up.
Excuse me, who did?
Sebastian.
Oh, Deputy Commissioner Sebastian, I want to massacre the last name again.
Arduengo.
Thank you.
Hi, thank you. I am not a deputy commissioner unless my promotion letter was lost in the mail. I am an assistant general counsel. I wanted to join again to add to the healthcare advocate's testimony and say that the department did consider for this role taking action similar to New York and other states in terms of prohibiting insurers to offer stop loss policies to small employers entirely. And because of the uncertainty in healthcare policy at the moment, For example, the markets are unmerged right now. They could be remerged in 2 years. It's unknown how that will affect premiums. We believed that it was in the best interests of all for employers who are currently self-insured to be able to keep that coverage and keep paying a stop loss premium that is similar to what they're paying now and have benefits, the same benefits that they're currently offering, rather than functionally being forced to seek other options at this moment. What we have told the stakeholder group is that because the rule requires us to take a look at medical inflation every 3 years and revise the stop loss rule accordingly. When things have stabilized, we would consider more drastic action, but in the interim, we have asked for the committee to consider referring that larger question of adverse selection against the small group market and what small employers should do to the standing committees for further consideration.
So, thank you. Mr. Fisher, you said this stuff is complicated. And most people don't know what stop loss means. And we use terms like greater exposure.
And attachment points, and yes.
And we're not sure what this is going to have. We've just, the previous witnesses said 2 years from now, there's debate over what the result will be. We use expressions like kicking the can down the road. And I'm saying the expression that's been used most in the last 2 years since COVID is we're all in this together. And it seems that the Rules Committee job is to see that statute is carried out, and we occasionally find ourselves saying, how do we have statutes that where we approve taking risks that 2 years from now we're not sure about as we craft insurance policies in which we're not all in this together. So it's not complicated. You spread risk and then everybody pays, or you don't spread risk. So I'm going to just ask one question. If an employer has a lot of sick people and the stop loss doesn't cover the problem, what are the employer's choices at that point by law? What are the employer's choices if they've gone this route and it fails a particular employer?
I think that the major decision point for the employer is whether it's advantageous to join the small group marketplace as a way to have less risk.
That's not my question. My question is if they have been persuaded to join the small group market and they have suddenly more exposure, more people get sick. There is a shortage of money. Who absorbs that shortage? What are the choices?
So I would have to defer to my DFR friends about choices an employer has during the plan year. But on a higher level, because I don't know exactly whether during the middle of the year, the employer can shift directions. But generally, an employer that has, maybe this is where you're going, an employer that has more expenses than they can manage has very few choices. They have to shed expenses for their business. And I don't know if that means having fewer employees, or I don't know what that means for an employer.
Is simply filing bankruptcy a solution?
It may be.
In which case, what happens to those who are sick and believe themselves to be insured?
Yeah, I won't go down the road that I'm not 100% sure of about what the consequences are, but they're not good for the employees.
And
Excuse me, Mike. I would like to, I think I could address this question. So a small employer with a less healthy employee pool could get insured on the small group market. And because those plans are fully insured, all of those expenses would be covered by the insurer. The employer would pay the same premium, and that risk would be spread out among the entire risk pool in the small group market. If that same employer was self-insured, they would have stop loss, and any losses above, for example, under our current rule, $33,200 per individual would be covered by the stop loss policy. I think where it gets tricky is when that employer renews their stop loss coverage the following plan year, that coverage will be necessarily more expensive because that employer is more risky for the insurer.
Mhm.
And this is the adverse selection problem that Mike and I were referring to earlier, in that once it becomes too expensive for an employer to self-insure, we don't want the small group market to be in a position where it's functionally acting as the insurer of, or the coverage of last resort for employers that have employee populations that are too sick to self-insure in a financially viable way.
thank you. Senator Lyons, I missed you when you put your hand up.
Thank you, Mr. Chair. Actually, a couple of my questions have been answered during the discussion, but I came in a little bit late because of another appointment, and I don't know if, based on Vermont law, a DFR can go the New York State route regarding stop loss. Is that something that you believe from a legal perspective you could do? And I'm asking Sebastian Arduengo and perhaps also Jennifer Carby.
Yes, we could absolutely do that under current law.
Okay. Jennifer, I'm looking at you.
No, Jennifer Carby, Legislative Counsel. I don't have anything specific to say. I'd have to look into the issue, so I defer to DFR on their view at this point.
Okay. So it would eliminate some of the differences that we're seeing and some of the concerns that we have regarding folks who have high expenditures, healthcare expenditures within the small group market. whether or not they're ESI. The whole issue around raising premiums as a result of one person having an illness has always been a huge concern for many of us. And this does touch on healthcare policy as much as it does on insurance. I think it would be helpful to have policy committees evaluate what's happening here. Not that we have time to do it, but I think it's very important that we are aware of it. That's all,
Thank
Mr. Chair. I don't have any other comments or questions at this point.
Thank you, Mr. Chair.
Thank you, Mr. Fisher. Thank you for your tenacity over the last, thank all of those who participated, but for their tenacity over the last several months as they tried to reach a solution that has not made either side happy, but they're ready to go forward with. Senator Bray.
Mr. Chair, if we're finished with our discussion, I don't know if we are, but I would move approval of Rule 21P13 and ask that the committee write a letter to the Committee of Jurisdiction highlighting the concerns that we have on the policy implications.
Sorry, just to be clear, is it the version that was attached to Sebastian's November 30th letter?
Yes, the most recent proposed version, the edited version of the rule that we have before us. Thank you.
Senator Bray has moved that the rule be approved as presented in its most recent iteration,
November 30th.
November 30th. Are you ready for the question? If so, all those in favor say aye.
Aye.
All those opposed say nay. And the rule has passed, has been approved. Which brings us to the next item on the agenda, and Senator Bray will, before we conclude the meeting, we will discuss the letter and the ones that have already been prepared.
Thank you.
Department of Financial. That's great. P31, Department of Financial Regulation, Vermont Department of Regulation of Administrative Procedures. Special Counsel of the Department of Financial Regulation, Sheila Grace, will be a witness, as will Assistant General Counsel, Department of Financial Regulation, Daniel Retta. Are you, Ms. Grace, the floor is yours.
I'm sorry, I didn't hear that very last part of you.
Sheila Grace, the floor
Great.
is yours.
Great, thank you very much. Good morning. My name is Sheila Grace. Dan Raddick is with me here today, and it's possible Carla Nuiza will also join us at some juncture. DFR's proposed administrative procedures that are before you today replace the current hearing procedures found in Department Regulation number 82-1 revised. The proposed rule establishes up-to-date, clear, and comprehensive processes for proceedings before the department. It takes into consideration the updates to technology by requiring electronic filings and allowing for remote hearings. It also describes the department's process in much greater detail than the previous version in order to prevent confusion. For example, the current rule holds that a filing occurs when a document is received by the commissioner, while the proposed rule describes the step-by-step process for effectuating that receipt. Additionally, there are multiple sections to clarify how the department handles issues such as defective filings, computation of time, postponement of hearings, and the like. Vermont law regarding the requirements for proceedings before the Department of Financial Regulation vary quite a bit. For example, there are department-specific laws that do not require hearings at all, and others that require the department to hold a hearing to listen to public input or a public hearing, and others that require the department to hold an evidentiary hearing with cross-examination possibilities. So with this variety of proceedings in mind, the administrative procedures address general procedures separate from evidentiary hearing procedures and allow for procedures to ensure the public interest. Legislative Counsel Dexter Cooper highlighted 4 typographical corrections that we are prepared to address here today or will correct in the final draft of the procedures. So we are requesting LCAR approve the final proposed rule with those typographical corrections made and available for any questions.
Any questions for the witness? None at this time. Mr. Raddick, Assistant General Counsel. Would you?
Thank you. I have nothing to add to Sheila's comments.
The ultimate compliment. Are there any questions for the witnesses? Seeing none. Senator Bray.
I would move that LCAR approve Rule 21P31 as amended by the, is further amended by,
There are typographic errors.
okay, and we don't need to do that either. Okay, so just approve the rule with the typographical corrections. Thank you.
Senator Bray has moved that the rule be approved with the typographical corrections. Is there any discussion? If not, all those in favor say aye.
Aye.
All those opposed say nay, and the rule has been approved. Thank you very much.
Thank you very much.
Thank you.
Which brings us to committee discussion. First item on the agenda, which is interestingly enough, a code of ethics for investment advisors. After we've discussed people that have health insurance advisors suggesting health insurance issues. So we have a memo and turn that over to council.
Sure thing. So at your last meeting on November 18th, based on a line of questions from Senator Benning, the committee decided that they wanted to send a letter to the committees of jurisdiction, which is from the House side, Commerce and Economic Development, and on the Senate side, the Senate Committee on Finance, asking for some further investigation into the development and enforcement of an investment advisor's code of ethics and written policies on vulnerable adults, and the issue that came to light as to the enforceability of this and whether or not there was guidance from the state as to the contents of them. So I worked with David Hall. I went back and listened to your testimony. I think I captured the committee's intent there. I would look to Senator Benning, since this was at his initial direction, to make sure that this is in fact what he wants to be conveyed to and sent to the committees of jurisdiction. And much like what came up when you were talking about the healthcare stop loss rule, this letter is being sent under LCAR's authority under section 817E, which allows, based on a majority of the committee, for you to send letters requesting that the standing committees take up matters that are outside the scope of what LCAR can really do.
Thank you, Senator Benning.
If I can, Mr. Chair, I think legislative council did a brilliant job in constructing the letter and how to approve it's leaving us in its current form.
Okay. Without objection, then we will, on behalf of the committee, we'll send a letter. Second item, review a draft regarding licensing regulations, registered licensed family child care homes, etc., to the committees of jurisdiction.
So also from your November 18th meeting, the committee discussed the issue that came up with respect to the free childcare licensing rules and the fact that they've been filed as emergency rules, and the committee's reaction there with respect to, did this, give rise to an imminent threat to public health and safety? So this letter is very, very procedural. It's taking a lot of language and citations from the Administrative Procedure Act, and it is going to the committees of jurisdiction as well as the Commissioner for Department of Health for Children and Families, the Secretary of the Agency of Human Services, and then this one has a carbon copy to the Chair of LCAR as well as the APA clerk, and it's saying, you didn't follow the process for emergency rulemaking. We expect that you are going to do this quickly, like you said, in testimony, and this is imperative, and it draws some language from the intent section of the Administrative Procedure Act about how there needs to be the public input process of rulemaking, which is the piece that is avoided or sidestepped in emergency rulemaking. And again, I went back and I listened to your deliberations from your last meeting. Hopefully this captures the intent of the committee. And I'm merely your scribe on these, so I will look to you to make sure that I'm capturing your voice and your tone in the way that you want it to be.
Pleasure.
Mr. Chair?
Senator Lyons, my apologies.
Yeah, just a quick, I have a question. It's probably for Anthea or for the committee as a whole. Does it make any sense whatsoever to send a copy of the letter to government operations committees? Since they do review APA from time to time? Or does this not rise to the level of making underlying changes?
I think that is a really valid point. If the APA were to be amended, I do believe that would be something that would be before both the Government Operations Committee. That's where it went the last time changes were made to it. If maybe the standard is not the appropriate standard, maybe there needs to be a lower standard that needs to be met. Maybe, as has happened in multiple instances over the last 18 months to 2 years, you've seen a lot of emergency rules, and a lot of them easily pointed to COVID as the basis for the threat to public health. Maybe, this situation with ECF has unveiled something that should take closer investigation by the Government Operations Committee. So I think, up to the committee, but that is where it would go if there were to be changes to the APA.
Thank you. I guess I would leave it to everybody to discuss. I don't have a vote today, but I think it kind of makes sense to have those committees see this.
Sen Break.
Yeah, I think Senator Lyons has a helpful suggestion, having served on GovOps 2 times round. So APA doesn't come up often, but I know it's of real interest to the committee. And then my original remark was that our council was batting at 2 for 2. I thought it was another very concise and helpful letter. So thank you.
Katie McGlynn helped with this one as well. So. That are very hard.
Is that a motion?
Yes, I would move that we approve the letter, the second letter, the letter we're discussing now. And it's got a long subject line, so I won't repeat it. And that we just include the 2 government operations committees in the who receives copies. Thank you.
Senator Bray has moved that we approve the letter that's been drafted and add to that, sending it to the committees on government operation. Any discussion? If not, all those in favor say aye.
Aye.
All opposed say nay. And thank you. Thank you, Council, for your work on those. And we had Senator Bray, did you asked that we draft a similar letter earlier to the healthcare committees regarding the issues that we dealt with today in stop loss, or am I in error?
No, that, yes, please. I think that will be helpful, even though Senator Lyons is with us, to flag it formally and send it on to both House and Senate committees. As Mr. Fischer was pointing out, it's really, there's an underlying policy question, and it seems to be our habit when we see concerns around policy coming through in the form of a rule that we help the committees of jurisdiction out by flagging it for them as well.
Senator Lyons.
Sounds very good to me.
I'll have to.
Okay, hearing no objection, we will have a draft of that at our next meeting. Is there any further business to come before LCAR this morning?
Yeah, just a point of information. In our discussion in the last meeting, when we were looking at the emergency rulemaking, E17, 18, and 19, and there was a communication between legislative council and the chair of LCAR, who is now the interim secretary of administration, Chair Clauser. And apparently there's some interest on the part of LCAR to visit with us to talk about process and forms and some changes that might create better clarity in the process. When we had sort of asked the question, what standard or what you used to decide that those three rules were in fact emergency rulemaking, all they did was basically reference APA. But if you reference APA, that wouldn't be the case. So anyway, I had reached out to Chair Clauser to set up a meeting, which we'll have on Monday. Senator McDonald, myself, Ledge Council, and Chair Clauser, and anyone else that she decides to bring along. And we'll have that initial conversation and talk about what they're thinking, and we'll bring that back to the LCAR committee at the next meeting. Thank you.
And are you sitting? Who's putting up the Zoom to do this?
I have that all forwarded to you.
Okay.
It's in Teams, actually. Whole new platform.
Representative Squirrel has got the Zoom set up for any committee members who would like to.
I can forward that link to everybody if they want to participate. It's not Zoom, it's meeting, whatever. It's Microsoft platform.
Okay. Thank you. Okay. Thanks, and thanks for taking the time to set that up in the last 2 weeks. It was certainly a point of discussion that emergency, whether or not emergency rules were, if they were emergencies, why weren't they done sooner, or clarification is important. Thank you. Any further discussion? If not, a motion to adjourn would be in order. Senator Break.
Just a quick question. So we are meeting in 2 weeks, is that correct?
You have a full agenda.
Yep. Okay.
Merry Christmas.
I think it's 6 rules.
Say Merry Christmas again.
You have 5 rules.
Yeah.
The rules were hung by the chimney with care. Okay.
It's a big tree.
Not seeing Representative Meyer in the room, would move that we adjourn if all our business is finished.
Everybody's moved that we adjourn. There's no further discussion. All those in favor say aye.
Aye.
Those opposed say nay. And thank you. Thank you, committee, and thank you. And, we'll meet under the big tree.